Hey there, if you follow us here on our YouTube channel or our website, you know my name is Scott Talley. I'm the owner broker here at 5Market Realty, where we like to do market updates to keep people informed about what we're seeing in the Athens and Oconee real estate market. And that's what we're here doing today. If you follow us on these videos, you might notice the background's a little different. We've expanded into some new office space downstairs, and I haven't quite figured out the lighting situation here behind me, but you're getting a glance at my office space. But what we're going to do today is we're going to talk about what I believe is becoming a monumental shift in new direction in our real estate market. And of course, we're going to go through the typical things that we do each year. If Athens Area Real Estate has any interest to you, be sure to click subscribe. But we're going to get started, and we're going to talk about shifting in a new direction and what we believe we might see the future of interest rates from keeping current matters. So we're going to get started here with the information. As you know, we'd like to follow four main things: total new listings, average days on market, average sold price, and the total amount of homes sold. So what we do is we track this over 3 years, and let's get started and we'll take a look. The numbers are continuing to see locally what we've been seeing. You can see here we've got just over 1,700 new listings, which is down almost 2% from last year, but significantly more than 2023. The days on market is up 23%, which is significant, almost 60 days. Our average sold price is only up 1.5% at 501. Now, I know $501,000 is a lot, but the fact that it's only up 1.5% is where the good news is. And the total home sales are down almost 9% at just about 1,170. So we're seeing less sales over the year. We're seeing more listings. And while that may sound like bad news, in the long run, this is going to be good news, and we're going to get to that. Let's look at the month of September here of the last 3 years. This past September, we were down on new listings just over 9%, 147. Days on market also up 20. And the average sale price actually went down, $495, just down about 6%. And then we look at the total home sales. I've circled that there. As you can see, we were down 14% from last year, 112 sales. Now, while that's technically bad news, I can tell you in our office, we have not felt that. Here at our company, 5Market Realty, in August, in September, and now in October, we are seeing a lot more activity, more contracts, more buyers entering the market. And that's sort of where I'm going to go on the next slide to start to discuss a little bit of what I believe is a shift we're seeing in this market. So here's the monthly inventory of homes. And right now, this time of year, you're going to see homes come off the market that did sell in the summer. So we're only 411 right now, but that's still 10%, 10.5% above last August. So while the homes are technically coming down, it's seasonal, and we're still above where we were the same time last year. As you can see, in September, it was 368, below 400 in October. Now, this is something I pulled that's a little new, and this is where I want to talk about how we're seeing things change in the market and why I believe this is good news. This is welcome news to buyers, welcome news to people that work in the industry, because the fact of the matter is, since April 2022, really 2023, we have been in a recession in real estate. Maybe the rest of the economy hasn't felt it, but mortgage lenders, closing attorneys, people that work in our industry, they know, and we have been in it. But things are looking a little different, and I firmly believe that. So what you've got here is the average yearly home price year-to-date, Clark and Oconee County. Here on this slide, I have chosen 2016 to 2020, and this represents in the thousands. So you can see in 2016, the average home sale price was $235,000, and then it goes up to about $301 in 2020. So first of all, I'd like to say I wish those prices were still around because they sound great, but let's look at what that yearly average appreciation was. Get my head out of the way a little bit. 2016 to 2019, almost 6%. Annual yearly average appreciation in our two counties, Clark and Oconee, just under 6%. Really healthy, really predictable, a good economy right then. And we all know what happened in 2020. So here's where we're going to go now. We're going to go to 2021 to 2024, and you can see indicated right here, 355 average home sale price going up to 494 in 2024. That represents an average yearly increase from 2020 to 2024 of 11.5% annually. 11.5% from under 6%. It doubled. That was not sustainable. I know it was a fun ride for some of you watching your equity grow, but it needed to calm down. And now I want to draw your attention to 2024 to 2025, 494 to 507. And what's that? 2.5% annual appreciation. That is a lower number than we saw before COVID, but it's what needed to happen. We need these prices to flatten out. It's going to give buyers an opportunity to get back in the market. And I'm going to switch now to some keeping current matters information, which is national. And where this is very relevant is this is showing the home price growth is moderating. You can see here, I'll move my head more to the middle. This is going back to January 2024, and you've got just under 7%, trending down to 3.7 in September. But look where it is in July of 2025, 2.3%. This is national information, not just our area, but it tracks exactly in line with what I just showed you for Clark and Oconee County. And that's what I believe is good news. Once we start to slow down this appreciation that was getting out of hand over the several years, we're going to have buyers get back in the market. So why is this happening? Obvious reasons. You can see here, we've got more inventory. This is showing you the number of homes for sale continues to be higher compared to last year. We've been over 1 million homes for sale nationally, and we haven't seen that since 2019. So that's a good thing. Buyers are having an option to get out there and look at property, and not everything's going so quickly. Inflation also remains elevated. Here you can see the Federal Reserve has had a target of 2%, which frankly I believe might be hard to achieve, but right now we're about 2.9. So because inflation's remaining persistent, but we're also seeing job growth go down, the Fed's in a interesting spot. We just saw a rate cut, and we're going to look at that job growth situation right here. So the unemployment rate increased to 4.3 in August, and that's a little higher than they want to be. So the Fed's trying to walk this line of battle inflation with the interest rates. But if the economy starts to show them problems, they're going to need to drop the rates, which they already did. And they're predicting they're going to do another quarter rate in the coming Fed meeting in October. Now, keep in mind, the Fed Reserve rate does not directly impact mortgage rates. We're really more curious about the Fed funds rate, the 10-year Treasury note, which is what I'm going to talk about now. So if you follow these, we've talked a lot about the 10-year Treasury and how that is correlated to the mortgage rate. What you're seeing here is the correlation between the mortgage rate and the 10-year Treasury yield dating back to 1971. So that's a tremendous amount of time, and the average spread was 1.76 between the 10-year and the 30-year fixed mortgage rate. 1.76. What's it been lately? Well, this is why we've seen these higher interest rates, because dating back to January 2023 to now, the average spread has been almost 2.6, 2.5. So basis points above the 10-year Treasury. That's why we've had high interest rates. But I want you to notice here, it was starting back here, this part of the graph at 2.76. Now we're at 2.10. So we're seeing that spread start to come down a little bit. And let me get my head out of the way. So right here is showing you the difference. You add on the 2.10 from the 4.2 10-year Treasury, and then you're getting to 6.3, which is interest rates we're seeing a lot right now. The good news is that we think this is going to continue to come down, the spread between the 10-year Treasury and the mortgage rate. So let's take a look. This is the forecast right here, the 10-year Treasury forecast to come down, forecast.org. And this is looking towards April 2026, getting down closer to 3. And if that were to happen, it would be good news. But let's just look at things in a different way for a second. What if right now, where the Fed funds rate was at 4.2, what if we had the average spread that we saw since 1971, which is 1.76? So what we're actually seeing right below my head is 2.1, making the interest rate just over, 6%, 6.3. But if we got to a more traditional spread at 1.76, the interest rate would actually be 5.96. This is the good news, coupled with taking the time of the 2 years with the high interest rates, letting the market build inventory, letting the transactions slow down. While it has been painful for real estate brokers and mortgage people, it was needed. And I think we're through it. I think through 2026, we're going to see a healthier, more normal functioning market with buyers entering the market. And what we're seeing, folks, in a lot of our transactions is the seller is having to give maybe just a little more than they want to. Not much, but maybe just a little more. And the buyer may have to go just a little bit more than they want to. And that's where they're finding the price. And that's how markets work. And it's good. It's welcome news. And I think we're going to see a little healthier, normal operating real estate market. They're going to end on this last slide here that's showing that if you can see through July, we were still in a very limited buyer demand market. But now we have entered from September, as I was saying, we saw it in our office. We have seen buyers in August, September, and now October enter the market. We are seeing more activity in the fall than we saw typically in the spring. It's behaving a little peculiar, but it's very good. So we're excited about that. We'll end the slide giving you a look at our group. As usual, I like to cover my head. This is our group at 5Market Realty. Be sure to click subscribe. Anybody in this slide here can help you. Info at 5M Realty, 5mrealty.com. Thanks for sticking with me for almost 10 minutes now. And there was a lot of information I wanted to get through. I actually have a pretty bad head cold and I didn't have to stop once. So I'm excited about that. Georgia won a really weird game last night against Auburn. And if you are an Auburn fan watching this, God bless you. There's always next year. Have a great week.